Elon Musk's Move 37, our thoughts on what he is doing right now, what he has been doing in the last 15 years since we are investors, and our thoughts on Tesla stock. In particular, we want to discuss the concept of Move 37, which comes from AI, the idea that sometimes when, particularly in the technology world, people make certain decisions that seem to be actually bad or wrong or just not leading towards a good goal, and then they turn out to be actually really, really good. And Move 37 is it's a metaphor that we're using. I'm going to explain where it actually comes from. It comes from DeepMind and their AlphaGo project, but it has the same kind of allure to it. It has this this feeling of, hey, this was wrong. While then, when everything is said and done, it turns out that that was actually the smartest move in the whole picture. So we think that Musk, for better or for worse, is driven by that particular attitude. And by the way, this is how Silicon Valley has been built. This is what companies, even Apple, even today, even post Steve Jobs, Apple is still doing these types of things. For example, they're putting a solid state LiDAR sensor in their iPhone, a very weak one, and nothing compared to what Waymo has or something like that. But still, they're putting a sensor in there, putting billions of dollars into iPhones for a sensor that nobody's using. And that could be a Move 37, it could be a waste of money, or it could be the most genius move ever, because maybe that particular technology 10 years from now will be the holy grail of VR and AR and phones and things like that. So there is that type of thinking in the technology world, deeply ingrained. And I don't know, I've never had the chance to have a one-on-one with neither Elon Musk nor Jeff Bezos nor Steve Jobs nor Walt Disney nor any of the icons of American capitalism. But I would dare to say that Move 37 is what differentiates America from every other country in the world, including China, although China is catching up on that front too. In other words, it's that type of risk-taking, that type of, if you will, let's say, if you take Christopher Columbus maybe, you can go to India this way or that way. Going this way, the traditional way through Africa and so on and so forth is, that's how people do it. Or you can go west, which is stupid. Why would you go in the opposite direction to get to a place? Well, maybe because the earth is round and therefore we can actually get to the other side. So you can call Christopher Columbus maybe the ultimate Move 37. Of course, there's been others before, and I'm not doing justice to Chinese philosophers or people in the Hindu world that or Egypt or all these other cultures. So I apologize for that. But in my knowledge, in my Western culture, educated knowledge, I think that's probably the ultimate Move 37. So let me talk about this. I want to tie this to the stock, though. This episode is about the stock. We talk a lot about science. We talk a lot about philosophy, about literature. We're even publishing a novel on this channel. So Orange Capital Partners is a hedge fund. We're investing in businesses. The purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. And losing money is what it feels like to run a hedge fund. If there's anything, if I had to summarize the feeling of running a hedge fund, then it's losing money and also making money. The highs and the lows are when the feeling kicks in. The stuff in between is almost like maybe if you want to use an analogy of physics, when you have high entropy and low entropy, then things are maybe not as things are whatever, and the stuff in the middle, that's when it really matters. That's where we are right now. Sorry for this analogy, but people in physics hopefully understand what I'm talking about. What I want to say here in this episode is that the fundamentals of the stocks, I want to talk about the fundamentals. I want to talk about how we feel about the recent sell-off, which is driven by two fundamental things, which is the macro and also a backlash against Tesla. And I want to talk about why we think Elon Musk is doing what he's doing. This is not even a podcast. It's March 10, 2025. This is Krim Delko For the year, we are down 45%. The market is down 3%. We're underperforming by 42%. Needless to say, the main underperformance comes from Tesla. We had a huge drawdown yesterday, and the market is selling off. And so let's start first with, let's put the macro out of the way, because there's a lot of macro out there. When we say macro, that just means that there is, like for surfers out there, when the tide goes up and down, the waves change. And no matter what kind of breaks you have, no matter what kind of sandbanks you have, whether it's on or offshore wind or whatever, the tide is so big and the forces are so strong that it's going to impact your surfing. So that's what macro actually means. So we have a situation right now in the US macro where we have, for lack of a better word, austerity coming. Austerity is when the US federal budget is getting cut. And it's getting cut in the right way. So I'm going to put this right out, first thing. So we are not cutting budgets here in a sort of, and I always compare it, let's say, to Greece or Portugal or countries like that went through austerity in the 2010s because they couldn't afford their spending anymore. We're doing it a little bit different. We're doing it in a sort of more, think of a private equity company buying a company which is bloated and streamlining the company. So that's a good thing, and kudos to Donald Trump and Elon Musk and Doge for doing what they're doing. The problem that we see with this, other than the backlash against Elon Musk in particular, is though it's really hard to do. So the question, of course, is the thoughts are there. Actually, we have, according to Elon Musk, there has been studies, lots of studies. There's a budget office, there's all kinds of offices in the US government that actually deal with these types of things. We have accountants, bean counters, all kinds of people in the government that are in charge of running this place and making sure it's not wasting money. But because of the political pressures and the corruption and the waste, these things don't get done. So what we're trying to do now is a revolution from within, with Donald Trump at the helm and Musk as an operator and others, not everybody, but others also on board. I think there's certain people in the cabinet that I trust that are on board, such as Lutnick and Hexet, others like Rubio and Bondi and people like that. I don't find very committed, sometimes also not very capable, maybe, or both. So not everything is great, but anyway, it is what it is right now. That's what we have. That's the cards we're dealt with. Better than certainly under Biden, better than under almost any other president, particularly Democrat president. I put this right out there. I'm a Republican. I am not very fond of the Democrats, although I have been voting Democrat until 4 years ago. So things have changed. And the reason things have changed, in my opinion, is because I've realized that the blob in Washington is actually a one-party state, and the Democrats are more grifters than the Republicans, because at least the Republicans grift in a sort of more useful way through defense spending and things like that. And more importantly, also, the Republicans tend to be wealthier, so there's less necessity for grift and things like that. But anyway, it's not meant to be partisan here, and I don't really care what people think. Hopefully, this podcast can be put on a sort of more rational basis, and for people who are interested in how we feel about the current macro situation and the stock of Tesla, keep listening. If you care about politics, then you're not going to learn a lot in this particular episode. So back to the macro. So we're looking at austerity, and we're looking at the potential for cutting expenses and firing people, and there's going to be a backlash, a ripple effect, of course. So if I fire, if I fire 200,000 people in the federal government, and there's 200,000, babysitters that don't get hired, and drivers and Uber drivers, and so there's going to be an impact on that. I think the jury's out how bad that impact will be, and the jury's also out in how much that actually will impact the economy, because every penny that is saved on waste can be reinvested somewhere else. So that's number one. So we're long-term absolutely bullish on this. There could be a short-term recession. The market could sell off. There is leverage in the market. Things have to be cleaned out. So there's a lot of those types of things. And it's part of our shortcoming as a hedge fund not to have caught this. That's just not how we operate, though. We're not focusing on these things, and that's for another episode. Why our strategy is to hold long term. The reason our strategy is to hold long term, maybe let me put this as a tangent, just for people who are following this for a long time. Hopefully you understand. But let me reiterate this. We've decided somewhere around the mid 2010s to focus on fundamentally new concepts and engineering practices. In other words, disruptive technologies, because we believe that the most value creation comes from there. Now, that doesn't mean you can't make money buying stocks, shorting stocks, currencies, and things like that. But it's just how we started. We're a macro-driven hedge fund, still are. The thing is, though, we just decided that the main driver of wealth creation is technology. And because technology has leverage, it creates lots of value. In other words, if Tesla solves the self-driving problem and puts robo-taxis around the world, then that is going to create so much value and so much wealth that it dwarfs us trying to, catch the peak of a stock or the bottom of a stock. And that's why we spend more time trying to understand things like reinforcement learning and AI and the chip technology behind the AI revolution, because we've also identified compute and generally what is necessary for AI as the main driver of wealth, because that allows for fast, rapid iteration, and fast, rapid iteration is the fundamental driver behind fundamentally new concepts in engineering practice. In other words, engineering is actually iteration, and compute just accelerates that iteration. Math cuts that iteration short. If you have smart algorithms, you don't have to iterate too much. You can kind of narrow the space of iteration. So that's kind of where we see our sweet spot. We see our sweet spot where science and technology and entrepreneurship meet each other. And having said that, now back to the macro side. So we haven't caught that sell-off. People like Steve Cohen has been vocal about this. Buffett has been sort of indirectly vocal about this by having a lot of cash. So people have actually positioned themselves like short the market, or at least not long. So some of the smarter people in the market have done this. We haven't done it, and we're down 45% for the year. That's the price we pay. And we think that the macro situation is warranted the way it is. So that's very important for everybody out there who runs a fund. One thing is to lose money. The other thing is to understand why you're losing money. That's very, very important. If you know why things are happening, if you have an explanation, that is already half the battle won. The other half is, of course, you have to stay in business. You have to manage your leverage. You have to, control your costs. You have to do all these things to stay in business, because what's the value of your business, your asset, if you get out, if you can't survive? So you have to be very, very careful about that. And we are actually very close to a threshold now as a fund where we might have to we have to monitor our leverage, let's say it that way. I don't want to divulge more, but we are 45% drawdown is massive, and that does impact leverage. And by the way, leverage is not just the kind of leverage you have in the fund. It's also your cost structure, your vacations, your employees, the kinds of services you consume as a fund. We're very light already, but you might not want to use maybe certain subscription services. Like, you have to be very careful about these things. So back to the macro, the way we see the macro paying out is we have now sort of the J curve, and then we'll have very, very strong growth, very strong real growth. Whether that comes in 3 months or a year, that is hard to say. Hopefully it comes sooner than later. But I think what the Trump revolution is doing is a good thing, and it's going to actually proliferate real growth. Now, back to why we think real growth is actually very likely. It is because of the technology. It's the technology, stupid. And before I start talking about Tesla, let me just say a few words about NVIDIA and AI. So the reason we are very, very interested in AI is because we believe that the current AI, which is the combination of foundation models and fine-tuning, the combination of autoregressive transformer architectures with reinforcement learning driven fine-tuning, this combination actually has proven to work really well. So think about it this way: the pre-training transformer is compressing knowledge in a latent space, so in a space that is better readable for machines. It's a bit of a shortcut, but it still captures most of the knowledge. And then the fine-tuning is the reasoning around that. So you can kind of think about it like I give you, imagine you have a 10-year-old child, and you upload that child with all the knowledge of the internet, and then you train the child to actually use that knowledge, which would be the fine-tuning. And then lo and behold, if you can do that at parallel scale with hundreds of thousands of NVIDIA Blackwells, which is the latest version of NVIDIA, and you have CUDA, which helps you to program this and parallelize the whole thing and make it even faster, more efficient, then that child by the age of 12 will be smarter than Einstein. That's the idea, and actually outpaced Einstein by many, many orders of magnitude. So this is where we're going, and that's why we're so incredibly excited about the future, whether it's scientific discovery, whether it's writing materials for marketing, books, literature. Lots of knowledge can be produced very quickly, and that helps iteration. That will help creativity. What the role of humans will be, that's for another podcast, but there's going to be lots of value creation. Let's take a very simple math, okay? Let's say if you can improve anybody out there who's using ChatGPT or Grok 3 or something like that, I think would easily agree with me that at least 10% of her time is being saved by using these things. Let's say, and that's conservative, but let's say 10%, okay? For example, yesterday I went to a lecture about solid state LiDAR. I spent 45 minutes listening to the person. While he was talking, I was checking Grok 3 for certain things that I didn't understand. I then went home. I checked a few papers that the person wrote. I checked through Grok 3. I'm using Grok 3, but you could use ChatGPT for that too. And I think within 2 hours, I had a good understanding of what's going on in the LiDAR space. That would have taken me probably 2 days somewhere else 5 years ago. So that's a huge productivity gain. If you extrapolate that to the economy, if we have a $100 trillion economy and 10% productivity, that is $10 trillion of value created. So in that sense, I think it's real and it's going to happen, and it's going to create lots of value for society. And therefore, we are very, very happy with NVIDIA, because NVIDIA is the low-cost producer in this space. For people who want to know more about this, go back to our channel and do a search on our website, NVIDIA, and think. We've spoken a lot about why we think NVIDIA is the low-cost producer in this space. And now let's talk about Tesla. Tesla is the main topic of this episode. The stock is down 50% from the peak. And first and foremost, it's down to the levels before the Trump election. So there's been some hot air after the election. Understandably, the market was excited, and for the right reasons excited, because, and this is now the move 37. This is the meat of this episode. What Elon Musk is doing here with Doge, as crazy as it looks, as self-destructive as it looks, and as scary as it is for us, Tesla shareholders, for employees, kudos, shout out to all the employees out there, and people who drive Teslas who are now also targets of the left-wing terrorists. Nevertheless, this move 37, in my opinion, like many other moves that Musk made, might look a little bit weird or even crazy right now, but it's going to turn out to be a very, very important move. Here's what we're thinking. We believe that Elon Musk, through his operations with SpaceX, and particularly Tesla, actually, in China, has understood how much more competitive China is than the United States. And that's simply because the regulatory framework in China is a lot more straightforward. And there is, although there is a lot of corruption when it comes to economic growth and infrastructure and things along those lines, it's pretty straightforward. So the Chinese can build something for 20 years, horizon. There is much less, opposition to technological progress and things like that. I think that's what he's trying to solve. That's why he's in Washington, D.C., to deregulate, to get rid of corruption and waste, because he wants his companies to be able to operate in a more straightforward environment. The other choice he has, and that's, by the way, not crazy to think, is to do what Dana White did with the UFC during COVID. Dana White went to Abu Dhabi and built a business there. Now he's back here and he's doing very well, but there was a time when it wasn't clear whether UFC fights can happen in the United States. So he went to Abu Dhabi. So there's a chance that Musk could do the same thing. The Boring Company is already doing business in Dubai, and I'm just thinking this is just me thinking out loud. I've never spoken with anybody external about this, but let me put it out in the public. Imagine Dubai signing up for a project where, let's say, 2 years from now, the whole city is full of cybercabs. This is not crazy, and the same could happen in Saudi Arabia. They're building these futuristic towns. Singapore could do it, although Singapore is probably a bit, there's too much legacy there. It's going to be hard, but it's doable. These Asian cities, Middle East, Asian, let's put it all together in one big block there. They have two things that they need to deal with. One is rapid growth and wealth. The other is unbearable traffic. They're not built for the kinds of traffic that even we have here because they have more people and their growth is faster. Let's say we here in the US, we had more time to build our highway system and the suburbs, suburban lifestyle and all that. They don't have that kind of time. They're growing, one generation goes from rags to riches, and there's just crazy traffic. So robotaxi, or I like to call it Cybercab, same thing, could be a solution for a town like Dubai, a town like Riyadh, or you name it, or some Chinese town, maybe not Beijing, maybe not Shanghai, but a second, third tier town that wants to propel itself to the future. So I'm saying that Musk has the option to actually go there if he can't fix the place here. So my point is this. What Musk is doing now with Doge is it's creating a huge backlash, but he's not doing this just out of altruism. He's doing this because he has seen in China what straightforward, efficient economic policy can do to a country, and he wants to replicate the same here because that's where his home is. And he wants to do it at the federal level because he needs this country to be prosperous. There's a lot of things that Trump is doing that don't match with this particular strategy, the tariffs, this whole Ukraine thing, but that's okay. I mean, it's not under Musk's control the same way that he has no control over the Chinese Taiwan policy or their Uyghur policy and things like that. But there's only so much you can do. But my point is this. I think we should lean back a little bit as Tesla shareholders and respect Move 37. Now, let me give you a few examples of how Move 37 works. For example, and more concrete examples. So a Move 37 has been to get rid of radar and LiDAR and ultrasound for self-driving cars. It's been a strategy about 10 years ago that looked very, very risky and scary, but turned out to be the right choice. I would say today you can say it's the right choice because FSD works with cameras only. But more importantly, when you take out something like a LiDAR from the equation, then your whole team is forced, enticed, incentivized, inspired to innovate around cameras. So you have, and I just happened to have spoken yesterday with one of the engineers who works on these types of things. I don't need to mention names, but he worked for a company that put certain sensors in some of their technologies that were not used at all, but they still put them in, and they spent billions of dollars putting those sensors in there. And I guess that's a good example of how technology works. Like, you sometimes do things that don't make sense right now, but because you have a sensor like that, maybe developers might jump on something and develop something that could turn out to be really powerful. One of the things I like to do, highly recommended for people who are interested in technology, is the Museum of Computer History here in Mountain View has these long-form interviews with people from the industry, people that worked at Xerox PARC, at Apple and stuff like that, Microsoft, like the early pioneers of Silicon Valley, maybe not the early ones, but the ones who are still alive. So the ones, let's say, that started their careers in the 70s and 80s. And it's really, really I just like to do that. And what you learn from them very often, let's say there's one interview with a gentleman that was an early employee at Apple, Next, and then later on at Apple II with the iPhone and all that. You just understand how, let's say, Steve Jobs often did things that were counterintuitive. He made a lot of moves 37. For example, he forced the team to do touchscreen on the iPod at a time when that was very, very difficult to do. and also didn't quite make sense. Like, why do you need a touch screen? Why do you need to invest all this money into this weird little technology? They couldn't do it, by the way, back then because the iPod was too small of a form factor. So they did something else, a bigger form factor, looked like an iPad today. And the idea was just to have a proof of concept. That became the iPad, but most importantly, the touch screen was proven as a proof of concept. And then, lo and behold, the iPhone came along. So those are the kinds of things that happen in technology, and a lot of people scratch their heads, and they end up to be really powerful. Another example is Jeff Bezos, very early on in the Amazon story, decided to rewrite all the software, I think what would be called cloud native today. For people in the industry, they know what it is. For those who don't, go check it on Grok or Google or whatever. But you rewrite your whole software stack. And it might be very painful right now, but it could end up to be really, really strong in the future. And you could argue that Doge right now is that Move 37, both actually from the perspective of Trump, but also from the perspective of Musk. Now, is this managed properly? No. I think Trump needs to take more accountability here and ownership. He needs to go after these terrorists. He needs to put people in handcuffs. There's anarchy out there. Like these things, Musk cannot manage that. And I don't think it should be Tesla's private security that takes care of these terrorists. It should be the police. It should be the National Guard. This is domestic terrorism. So that's important to understand. And I think the same applies to Europe. And if that doesn't happen, if the backlash doesn't stop, I really think Tesla should actually refocus their efforts on places like the Middle East and Asia. I mean, what are we going to do if we have cybercabs, excuse me, driving around our cities and then vandals start destroying them? That's going to be difficult. Now, of course, we could design them in a way that they're not destructible or even fight back, but then that's almost Terminator stuff. I think it would be best if some of these people particularly that finance these things, such as Reid Hoffman and Soros, get indicted and put in handcuffs for financing activism and terrorism. And I wouldn't be shocked if people like Soros even shorted the stock, anticipating all this backlash because they financed it. So those types of things are not very healthy for the country and need to be done. But again, that's a whole other topic. I just want to get back online here. So what do we actually think about the stock? In times like this, it's even more important to focus on the fundamentals. The fundamentals of Tesla are that we have the technology. The technology has always been the driver of Tesla. And what I mean with technology is we have a manufacturing machine that can manufacture millions of cars at scale at a cost that is competitive with anybody else out there. Including FSD. They are the best player in the world, given the cost-value relationship, better than any Chinese player, anybody else. The reason they have that is because, number one, they've integrated full production very early on, 15 years ago, with chips, software, and vision only, and camera only. And the whole stack is, whether it's software or hardware, the whole manufacturing stack is geared towards Cybercab. Whether you're XPeng or Baidu, you don't have that type of production facility. I don't care how good the Chinese are in production. When you're on the wrong path, you're not going to be able to compete with Tesla. So number one, that is a very, very strong argument for Tesla. Number two, here's another very, very important factor that people sometimes forget, which is that once we have full self-driving, unsupervised, there's going to be native full self-driving products. The most famous one is the one where you send your car to pick up your wife from the airport. That again is something that only Tesla can do. Nobody else can do this at a cost that is way lower than anybody else. And I don't care if BYD gives it away for free or not. Subsidized is not low cost. Subsidized is subsidized. Tesla is real low cost. So they're a real disruptor in a market that doesn't even exist today, which is a full self-driving car that is owned by people or a taxi cab. Both are markets that don't exist today. Well, they exist in some form. The taxi cab exists at the Waymo level, but Waymo is geofenced and very, very cumbersome and expensive technology, so therefore not scalable. So we have we have the lower cost model coming online. We have the energy business growing. We have the semi coming, and we have Optimus. So there's a lot of fundamentals that are working, and they're all driven by a technological core. To come back to the godfather of disruption, which is Clay Christensen, the late Clay Christensen, in my opinion, the most important and maybe only business theorist that matters, at least for our time today. He talks about the technological core. So what's the difference between the steel industry and the hospitality industry? Why can steel disrupt and hospitality cannot? Because there's a technological core that hospitality doesn't have, that steel has. And the technological core with Tesla is this fully integrated stack from hardware to software. That core can be translated into energy storage, Optimus, full self-drive, because it's the same core. So that's for people who are interested in to see a little bit what's next, to use another phrase from Clay Christensen. So the fundamentals of Tesla are very strong. We believe that Tesla can have tens and tens of billions of earnings in a relatively short period of time, and scale up the business in value into the trillions, because once you have 100 billion in earnings, you can be a $2.5–3 trillion company, and then the value of the stock will be accordingly. We expect a 5x in 5 years, 5x 5 years. That's kind of our expectation, although we believe that the risk here is way to the upside. Now, to summarize, I think Move 37 is very important. Move 37 is something that is almost inhuman, because let me give you an example of Move 37, right? You're a caveman or a caveman colony living in a valley. Actually, let me give you a really interesting example of a Move 37. There's a show I'm watching right now on Netflix. It's called The Vikings. And there's another show, by the way, called The Last Kingdom, which is very similar. Highly recommended both shows. Good acting, interesting, everything. And the Vikings starts with Ragnar, the one Viking who supposedly, according to history, discovered England. He chooses to do something that nobody else has dared to do, which is cross the sea to the west. So he's the first Christopher Columbus, if you will. And he does it because he has a certain technology, but still, it's a Move 37 because it's very counterintuitive to do what he did. There are lots of lands to the east that can be raided all the time, but there's this hope that maybe there's land on the other side. And that land on the other side has no defenses. Nobody expects them to come. There's no competition amongst the Vikings to go and raid. So it's all free. It's classical disruption. The technological core is navigation. They have a way to navigate. They figure it out, they go and they do it. So Move 37, again, I use these navigation examples. Christopher Columbus or Ragnar are both very similar in that sense. So you could say that Ragnar is the first Christopher Columbus, go west kind of thing. And I think we underestimate Move 37, particularly when it comes to technology, because it's counterintuitive. We want to see what's going to come. We want to reason by analogy. Move 37, by definition, cannot be reasoned by analogy because it's never been done before, and there's no analogy that gives you a certain certainty that's going to work. Now, why do people do it? Because there is a certain type of intelligence that allows for Move 37. And it's a type of intelligence, by the way, Pablo Picasso used it when he painted Les Demoiselles d'Avignon and created Cubism. It's when you can see around the corner, when you can see something that you might not be able to formulate right now, but you know it's there, and you have to take another path to get there. So it's in this lonely human mind. It's by definition not a common knowledge, not common practice. It's in a lonely human mind. But Move 37 is where wealth is created. Move 37 is when really new things happen. So Elon Musk, with Doge, is doing a Move 37. He's improving our country. He's improving the country for himself, for his businesses, because he wants to go to Mars and he wants to change energy and transportation on Earth. I think we are patient here. We have to watch for for the leverage, of course, but we believe that this move will generate a lot of value, and therefore it's worth holding on to the stock. Thank you.